So good afternoon. Each Canadian bank has a different risk tolerance level, so that if you're dealing with TD or you're dealing with RBC or CIBC or any of the American banks, you're going to find they all have a different risk level, and in some larger banks, it varies between the platforms. So for instance, you may not be able to get a term loan for a property, but you may be able to get a commercial mortgage because they like it better than the other people do. In some banks, including us, we have in-house technical expertise in dealing with contaminated properties. TD used to, but the person that did that, Don Rycroft, recently retired, so I'm not sure what they do there now. I have no idea what they do at BMO or what they do at Scotiabank, and I think that's probably a better health secret than the combination to the vault, because I've never been able to figure out who that is. And it's seldom the environmental issue that kills a deal, but it can be the final nails in the coffin. It's usually the financial aspects of the deal that kill it. You can usually get around the environmental issues. If you work hard enough, you have the better consultants on the side. I'm not sure where I'm going to be going now. Okay. So how to make your banker happy. Make sure you're building something for which there's a strong market demand. If the market doesn't want it, we don't want it either. Make sure your cleanup numbers make sense and are realistic. So ensure you have a contingency, as Mitch mentioned, for the unexpected, because there's always going to be an unexpected. Use top-notch environmental and legal help. Unfortunately, I've seen too many reports from developers that were prepared by second or third-rate consultants that in many cases I wouldn't trust to run a garage sale. So getting the cheapest consultant or lawyer you can find is penny wise and pound foolish. Obtain cost cap and other insurance products, as Mitch mentioned, to deal with any surprises. Make sure you understand what the triggers are so that you can explain them to the bankers, because bankers are bankers. They don't have a big science background there. Make sure that City Hall and the community support your development. We will not finance the development that the surrounding community is vehemently opposed to. So if you're building on that golf course that is surrounded by 400 houses, all of which bought the house on the basis that golf course would be there forever, good luck with that. Explain how you'll be able to handle delays and cost overruns. Where is the money going to come from and how much is available? Make it easy for the account managers to say yes. As Mitch used to call it, a risk assessment is once the kiss of death for getting a property financed. Some banks will still accept them now, not accept them now because they don't understand them. Excuse me, because they don't have a background in science and they have no desire to get one. All banks refer full depth cleanup to generic versus a risk assessment. I mean, that's just the fact of life. It's much easier to get a full depth full depth cleanup through their group risk management than it is to get a risk assessment, and they're much more liquid in our opinion. It's critical that the risk assessment has clear conclusions and recommendations. What we're proposing actually for some of our consultants or for some of our developers is that if you don't have to get a record of site condition, don't go through the full process of getting a risk assessment going through the Ministry of Environment. If you can get it, what we've proposed is that you get that risk assessment done by someone we recognize as a qualified risk assessor. You get that risk assessment peer reviewed by another risk assessor. If they both agree on the fact that the risk has been dealt with appropriately, we'll do the deal. We don't have to have the ministry sign off on it for us to go forward. Also, in the phase 1s and phase 2s that Dave mentioned, you don't have to go through if you don't have to go through to get a record of site condition, don't do the full MOE phase 1s and phase 2s. Do it to the CSA standard. It's half the price, and it gets the information that we want anyways. What we look for is on the credit side is the financial strength of the borrower. I mean, that most cases that trumps all else. For instance, so if you have a $5 million loan out to you and sitting on a property worth $10 million in downtown Vancouver, we don't care how contaminated the property is. In the event of realization, your equity will certainly cover the cost to remediate the site. And that being said, we're of course interested in the strength of your management team, your cash flow, your balance sheet, your position approval process, all those things that have to be done up front. But the project has to make sense from a financial perspective, regardless of the environmental condition. You can have the most pristine property in the world, but if your business plan is worthless, then it's not going to go ahead. So what we look for in ESAs is a consultant that prepared it. If you're using a second-rate consultant, you get a second-rate report. It's simple as that. You're much likely to get your report approved and your deal done if we like the consultant, and we don't like a lot of them. If we don't like the consultant, we can ask for a new report. And there are over 100 consultants in Canada that we recognize and approve. or we'll reject it outright. Oh, I'm way beyond my, go back. Okay, there we go. You also look at the current and proposed property use. We're converting from industrial to residential, that's very important to us. The age of the report's got to be less than 3 years old. We've seen reports 17 years old, and the developer says, well, it hasn't changed since 17 years, so why do you need a new one? But that we want something that's more current than that. Has an industrial past or formerly occupied by a dry cleaner or a gas station. The date the building was constructed, we didn't usually get excited about asbestos containing materials unless they were in poor condition, in which case we would require them to be removed. That was no big deal. However, we now request our clients to get an asbestos survey if asbestos is suspected to be present. And if you don't have one when the property comes up for renewal, then we won't do the financing. For lead-based paint, we just want to make sure that it's not peeling or flaking and it's in good condition, and we can live with it assuming that the paint is not accessible to children. The activities on the neighboring property, that's the one that's often overlooked, especially when it comes to former dry cleaners or former gas stations. So look for issues such as storage tanks, monitoring wells. The monitoring wells are there for a reason, and staining. I want to talk briefly about loss. The reason that I do is because Sarah Powell, a lawyer that Harry is quite familiar with, likes to tell a story about a woman who was sitting at a table in a kitchen and loft when suddenly a drop of liquid mercury fell from the ceiling onto her kitchen table. She looked up to see a number of beads of mercury on her ceiling. She was also pregnant at the time. The mercury resulted from the former use of the property, which was used to manufacture light bulbs, and the bricks had absorbed mercury vapors used in that process. When it was converted into a loft, the building was heated up, and the vapor which was absorbed with the bricks released it again, where it condensed into a liquid mercury. I do not know how that story ended, and unfortunately we had not financed that one, but I do know that it wasn't the only one out there. And I'm talking about True Drummond, which Dave alluded to. I passed this one on to our real estate markets group to have a look at, and they came back with these recommendations and comments that the site lends itself to a variety of uses. It sounds like the best use is a freehold townhouse project with the units in a common element condo for this street. For the project, we require, of course, we require that remediation and environmental issues to be dealt with up front, but assuming that they have been, we'd require an equity of 20 to 25% on the total project cost, including the land. We'd finance up to 75% of the total cost of the project. If the borrower used the purchaser deposits from pre-sales and reasonable deferred costs, he can likely reduce his equity down to 20%. And of course, it all depends on the project and the experience of the borrower. We'd like to see pre-sale coverage to end purchasers, pre-sales with mortgage approved or proof of ability to close. For a portion of our loan, a guideline is 80% coverage of our loan amount, but given that low rise at grade, we can consider that an exception to this guideline. Again, this depends on the experience and financial strength of the borrower. And so in essence, you're going to be looking between 60 and 80% of our loan to be covered. We also require the project monitor review the project budgets and monthly draws for new customers, even for the less experienced, smaller clients. And we require an appraisal to verify that the value of the project land. We do not do recourse lending and require a guarantee for approximately 30% of our loan. And for this project, we would like to price a project in the Brantford market at prime plus 125 to 150 basis points and a 1% setup fee. Thank you.